Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. Got Greg Machinery, Pete Peterson on here to talk about what's happening in the marketplace. Also want to thank John Deere for being a sponsor for this edition of Moving Iron Podcast. Greg, how you doing?
I'm doing well today, Casey. How you doing?
Doing good, man. Doing real good. We've got some different news that came out last week. We were talking a little bit about the Purdue farmer sentiment and how that looked like and what that meant for the marketplace. And we talked about how the auction prices were kind of a leading indicator as to where the market was headed, and kind of what we saw happening there. As market prices started to come up, you started to see more farmers more interested in maybe what their equipment might be worth, and maybe what that might mean as far as returns go, as far as trade-ins and stuff like that go. But Farm Journal put out a survey they do every year, kind of talking about what'd you plant, what brand did you plant, did you plant corn or soybeans, those kind of things, input costs, whatever else. They got down to machinery, and there was a marker on there that talked a little bit about, hey, 50% of the people that took the survey said that, hey, if they were to take a look at equipment, it's on the list of things to upgrade. And that's a little bit different than what we saw the first half of the year. But like we've talked about since January, since we started doing this podcast, that the overall marketplace had been it's up year over year, but it's not up 10, 15, 20%. It's up 3 or 4%, but it's stabilizing. And as things start to stabilize, more people start looking at what the next move for me is when my equipment comes. So I guess, Greg, as you take a look at that and some of the auctions you saw so far this week, how is that lining up with that sentiment that you're seeing people talk about?
Well, the Farm Journal farmer survey is really interesting, Casey, and I know you were all over that. It makes sense to me because, again, I think farmers, the belts have been tightened here for quite a while now, and understandably so. But what I've been seeing at auction, again, like you said, it's not fireworks and the pricing we were seeing in 21 and 2 at auction, where frankly everything was a record price. But right. Given the current market, there's been strength since end of February in the auction market, and I'm not saying it's all a bed of roses out there, but there's definite leveling off, and we're just. Last year, the drop was so aggressive based on the volume at auction that as the volume of late model units has slowed at auction this year, and will yet to be determined the rest of the summer how that goes, but it's definitely way off pace of last year. So the pricing we're seeing is solid. And then if you drift into anything with a little age on it, that's good condition. The pricing is actually almost going up. In fact, we had a sale. As we're recording this, it was 2 days ago. It was out in New York, I believe kind of Western New York. Fraley Auction Company had a farm sale. Now, granted, it was unusual items. It's not every day you see a John Deere 6430 loader tractor with 278 actual one-owner hours on it. So it's going to be high.
Right. And
loader tractors, that segment's been stronger anyway. But $128,000. 5K over the record, and then right next to it was an 03 7420 loader tractor with 1,522 hours that went for 122.5, and that was 18,000 over the record. So again, pre-def, like new, you got gold if you got something like that right now. Yeah. But even today, as we're recording, I was watching. I'm sure you were too. Some of these auction prices. I know Van Wall Equipment had a little online offering, about 50 items through Sullivan and Big Iron. And a couple items that caught my eye. They had a pair of 20 model 9620 RXs. I think they hour-wise, one had 1,105 hours, brought 348. One had 1,623 hours, went for 341, 750. And again, so 340 range, when the average on a 9620 RX now this year is 295.5, that's, you'd expect the average on something like that not going to go up, but it's only down 6.5%.
Right.
When last year the average auction price on a 9620 RX, 30%. It fell 25.6%.
Yeah.
Went from like 317 the year, or went from like 426 down to 317 last year.
Yeah.
So again, there just haven't been as many out there. And so the pricing's been, again, just a little more solid.
Yeah. And that's kind of what you see this time of year, right? You see that there's a limited offering. You don't see the whole smorgasbord of big, like this time, take a look at like November timeframe, right? You'll probably see 3 times as many of those tractors out there for sale just because that's the time of year that you're seeing. But
right.
The thing about this time of the year is it sets the tone for what the end of the year is going to look like, right?
It does.
If the time of the year is bad, it's worse than the end of the year, right? When this time of the year is good, it's typically a little bit better than it was this time of the year. So those dichotomies that you see, to me, this is the time of year that sets the tone for what happens at the end of the year, right? If we're seeing,
Well,
we're going to see.
Look at last year. You're completely right. Last year, June and July was like, whoa, there was blood in the water.
Yeah.
And that's tricky time if you're a farmer. Times are tight anyway, and you're sitting there going, well, I kind of don't want to spend anything, but if I did, I would upgrade this or that. But when prices are kind of 25.6% drop, you're like, well, maybe I should wait. Is it going to drop another 25.6%? And frankly, in 14 and 15, that's what I reported then is we saw 2.5 years where they dropped 20 to 25%.
Yep.
But this time right now anyway, it's looking like we had 1 year and 2 for combines, but 1 for tractors where it dropped off a cliff. But now we're kind of, so far, first half of the year, kind of normal depreciation rates. So it's been, like I said before, it surprised me a little bit.
Yep. Yeah, I'd say it's a different marketplace than it was this time last year for sure. It's not gangbusters by any means, right? But what you're seeing is a leveling out, and that's the first step to rebound in the marketplace. And we've been putting in that bottom throughout the entire year, right? And here we are sitting here looking at fairly decent prices out there, comparatively speaking, right? Relatively speaking, what we've seen in the past, right? You've seen good, solid pricing come in there that is not, down 20% one day up. All the volatility that we've seen in the marketplace is starting to really contract down nicely.
Yeah, and again, what's really jumped in our auction data is, again, if it has just a little age on it. And I was reading the paper with lunch today, my turkey sandwich, thanks to Mrs. Pete, having a nice turkey deli in the fridge for me. So I'm making the sandwich. I'm reading through the biz section, and I see a report from Edmunds, of course, like one of the sources with Kelley Blue Book on the used vehicle.
Yep.
And I'm not really a vehicle guy, although we do compile prices on cars in our machinerypete.com website. But I found it interesting, Casey. Edmunds came out and said the average used vehicle price is up 2.3% first half of 25 here. And it was getting into the reasons. And I think it mirrored very closely what you and I have been talking about for a couple of months now, that the supply situation of late model used on the dealer lot versus maybe a year ago, it's not fixed, but it's just better. And then if you flip it and, okay, who's looking to buy a car? Well, they're like farmers. They're under pressure. And now they're trying to judge this tariff stuff. My 401k, it dropped like a rock. Now it's back up, but I'm still kind of worried about it. Job losses maybe starting to mount. So basically people are pulling back, like farmers have been pulling back. And when you pull back, you hold on to your existing, in this case, vehicles longer. So the Edmund piece said the average age of everyone's vehicle right now is 7.6 years, and a year ago it was 7.3. So it talked about the competition for really good used cars on the lot. And what I found interesting, Casey, curious to get your take, but then it flipped and talked about from the dealer mentality. So dealers, the time on the lot was not high velocity, but the car dealers were getting cooler with holding because they were just waiting for the right buyer to come for that used whatever, Bronco or whatever you have, realizing that the price of new is going up and you might not have the availability of new with tariffs and whatnot. So they're kind of feeling like, like they don't have to shove it out the door to auction. Maybe I'll just hold on this and maybe it's working out better. So I don't know what your take is, but
it's a weird marketplace. You look at, so I've been looking for a wife. My car, I've found a wife, but I'm looking for a vehicle for my wife for some time now, and again, not in a big hurry, right? The one we have, I don't owe anybody anything on it, so I'm not in a big hurry to get rid of it, right? But it's one of those things where you kind of watch what's going on there. And the crazy thing I see about in the used marketplace on cars, and especially on the new side, is that price of a new car is ridiculous, right? It's, you're going to spend, you want an SUV of any kind, and you're going to spend 65 to on up, right? $90,000 in some cases, right? But a lot of those things, they have interest. The interest rates they have are, subsidized from the manufacturer, 1.9%, 2.5%, 2.9%, 3%, those kind of things. And you're looking at a 1-year-old car that's got 30,000 miles on it or whatever, and it's barely off the price of a new one, for the hours that the miles that you see. And you're going to pay roughly, 5 to 7% interest, depending on, where you're at on that curve. And typically when you see that happen, the programming of new is always, on the ag side and everything else, programming new has a great effect on used, right? And it's all about how that dollars play into those kind of things and the same thing, but it doesn't feel like it's there on cars, right? It doesn't feel like how programming is affecting that, because I think what you just said makes a lot of sense. The payment structure that you can come into might be $200 cheaper, even though because of what it is and interest rates and those kind of things, but it's just $200 less than the new one. So I'm going to get this used one over here. And I think to your point, tariff prices have really done some amazing things to the price of cars, and hopefully that goes away sooner than later. But the thing about that is, whatever that car is sitting in the lot for today, the price doesn't come down if tariffs go away, right? That's the thing that is there. Like, that's a static number that's there forever. It's like, that's there, right? If the tariffs come off tomorrow and the price of the car is now $10,000 cheaper, something like that, and the new one comes in, I sure hope those dealerships have those cars, those new cars that are higher priced off the lot faster than the ones that are going to come in that are less priced. Because again, that's the same thing you see on the used equipment side of the bus, right? When that market starts to shift, you've already got that number in here. If the market goes down and it comes in, that you're there, baby.
That's a tough place to be, isn't it?
You're having that.
Happening. The other thing I found interesting on the vehicle side is the kind of, you say the word engineering, it always, we think of it, making stuff,
right?
But financial engineering and how our things have changed in our culture. So now it was talking about the number of people that have stretched out to take, 7-year vehicle loans. And I'm pushing 60 here. So if you just said an 84-month loan back when I was, didn't have two nickels together and was trying to, fit a payment into our budget, it was like, we just knew, even from the limited financial advice we had from our stoic Norwegian parents, it's like, I don't want to tie myself to 84 months, but the costs have got so high, whether it's a combine or that SUV you talked about, or a pontoon up here in Minnesota. I mean, it's crazy what the new stuff costs. And people have got comfortable with like, okay, as long as my payment is X. And that's for young listeners of Moving Iron Podcast. Old gray-haired Machinery Pete's going to say, you guys be willing to swim against what everybody else is doing. Just because everyone else is doing a 7-year loan, don't be cool with that, in my opinion. But anyway, it's interesting to me how much it's changed over really not that long a time.
Yeah. Well, that goes back to, when you see the same thing on the farm equipment side right now. You're seeing 7-year notes out there, 84-month things, and I've even seen some programs that were 10-year notes. I mean, so it's depending on where you're at, But really, what it comes down to, and I think what's important to talk to people about on that, is that you have to understand that your equity position on that really dictates how you come out on that deal, right? I've always had, every car that I've ever owned or anything I've ever bought I'm always trying to stay ahead of the equity curve, right? So that wherever I'm at, whenever I make that payment, whatever it is, I'm somewhere in the range of the Kelley Blue Book deal that says, all right, cool, your car's worth X and you owe X, so you're in a good spot, right?
Right.
That's the same thing on the equipment side of the business. When you're looking at the equipment that's sitting on the lot or that's sitting in your shed, there's always two things fighting against you, right? Depreciation and interest. Those two things are always fighting against you. Now that both of those have been amplified, right? To where you have higher interest and higher depreciation costs as those come in. So speed and velocity of which you're trying to get rid of those is has such an impact on what that machine looks like when you buy it. So it's the equity positions that you're in, and I feel like we're seeing some of that equity that we've seen deteriorate since COVID is starting again to solidify up a little bit. So you start seeing some equity slowly be built back up because of the rate of depreciation is so much slower than it's been. The flip side of that too is the speed of which the interest rate cuts into your payment, which then cuts into your equity. That's another side of that too. That's a big deal. So those two things, when you start looking at velocity and speed of which you're getting stuff in and out, whether it's your barn or the lot, or the dealer's lot, whatever that is that you're looking through, your machine shed or the dealer's lot, those things all have the same equal impact that everything else does too, right? So it's there's not just depreciation on the dealer lot. There's also depreciation inside your machine shed. There's not just interest costs at the dealer lot. There's also interest costs inside your machine shed. So when you're thinking about what you're going to do for 26, that needs to come into your synopsis somehow of how figures what you're doing.
And back to what you led with, the Farm Journal survey. Now you've seen an increase since the start of the year about people verbalizing that in 26 they plan to make some equipment purchases maybe that they've put off. So yeah, it's fascinating. This stuff is all connected. One other thing on that Edmunds story that I read that I found interesting was talking about the number of people, and probably just having to, but rolling their current debt or underwaterness into the new loan,
right?
Which again, like you said, young listeners, listen to what Casey said. Don't try not to get in that position if you can. But even as we see the market solidifying with used equipment values, I am aware that we've talked about it, the lending pressure is sort of a tale of haves and have-nots, unfortunately, but I've been hit upside the head a number of times recently from farmers, sharing their reality of the difficult situation they're in with their lenders. So, no, it depends. Do you own the land? How much is it paid for and all that stuff? But it's, again, as you're able, as you build through your career, trying to position yourself with dry powder financially, so that when land values haven't dipped, for a long time. Maybe it felt like machinery values weren't dipping there for a while, but now last year they did. So, when it's right, and again, like we talked about on the used machinery side, I think people are talking about maybe 26, not to speed up your checkbook play, but, possibly mid 25, summer 25 might not be a bad time to be aggressive. So we'll see.
Yep. It's a changing market. We're coming out of a downturn in the sense that we've leveling out, but it's that time of the year where we're setting the tone, right? We're setting what the rest of the year looks like, and what it feels like now is is in line with what we've talked about on here so far this year. So fingers crossed.
More positive than last year. A year ago, we were having these conversations. There was fear from the dealer side, genuine fear. And it's not fixed, but it's just a different reality we're in right now.
Yep, for sure. Last thing, Greg, I've been thinking about this a lot with the online auction mix that we've seen so far. I mean, obviously there's dealer retirement sale only auction that we're seeing being online, and we're seeing a mix of consignment stuff and those kind of things. As you look at this new normal at the auction stuff, the thing I've been really thinking a lot about was where does the retirement sale, estate sale, dealership consignment sale, yearly consignment sale that you see some of these auction companies have, as these things kind of start to blend together because of obviously there's Joe Smith's retiring, so he has a retirement sale and it's online now, and those kind of things. But you go to pick on Big Iron here. You go to Big Iron and you'll see ABC Implement having something for sale, and Joe Smith Farms has got something in there, and then there's just some hodgepodge of things from all over the place. So the blending of the true kind of the three big ones that we used to talk about all the time, it feels like they're blending together. What's your thought on that? And have you thought much about that?
I've thought about it a ton, Casey, and that goes back to when I started before the internet was going. In the books, auction price books we used to publish, so this is 1989. I was 23 years old, but we had a column in each book. So we'd tell you the price, hours, date it sold, and then one column was sale type. So back then it was consignment, dealer, or farm sale. And then within farm sales, you've got your estate and your retirement, which those were the primo A++
right,
in terms of selling. And they just carried their own assumptions. Casey Seymour, farm retirement sale. Locally, everybody knows you. You take good care of your stuff, you were going to get a Casey premium because everyone knows Casey. So it's been blurred, no question. I think I love, and we see everything. Auction companies, hit it a zillion different ways. I like what Big Iron does and other outfits like that when they have, maybe a sale with 20 items from a farmer. Doing a good job about fencing those items and making sure these are Casey's. And Casey's retiring. Casey farmed for X number of years, and getting into some specifics there. Hopefully, an interview with the seller. So then it's a farm sale within the online huge event. But again, the reason I had all those on every piece of equipment reported on the sale type was because, frankly, the data used to show that farm auctions were the highest, and then came dealer auctions, and then came consignment auctions. But the consignment auctions prices varied on basically the reputation of the auction company.
Right.
How are they perceived by people? Now, it used to be pretty local. We cover up every state and all states in Canada. And again, every auction company is different. Yeah, I think these days, even more so than ever, it's super important, Casey, for auctioneers and on the dealer side selling used equipment. Just be super, super upfront and honest. And again, don't look at it like, hey, you're excited to have a potential buyer from 5 states away. But
right,
if the piece of equipment has issues, boy, for the sake of your business going forward, you really got to call that out. And we all make mistakes, but just as honest as you can say, when that person calls. And if you're a buyer, I always used to advise, before the online thing took off, I always advised calling the seller. So if it's a farm auction, get the farmer, and call the auctioneer, yes, but get the farmer, seller, or same on the dealer side. And just try to keep the person on the phone for a while. Like start talking about the Vikings or the Packers or the Cornhuskers or whatever, and then drift into the equipment. But the longer you kept them on the line, you were going to get a gut feel, something they said. And I think what people were looking for was honesty, and particularly about, an issue a piece of equipment might have. And to me, I always thought it sounds weird, but if I were a dealer or an auction company selling a piece with an issue, this is my biggest chance to set myself apart from others, because I'm just going to be super out front and say, if I'm a dealer, I'm going to price it accordingly, but I'm going to tell you what's wrong with it. And I'm going to, I'm going to do a video and tell you what's wrong with it.
Yep.
And the same opportunity on the auction side. Again, don't blow any smoke, because you blow that smoke, hey, it's sold for more than I thought. Well, that boomerang hurts like hell when it hits you in the back of the head.
Right.
And that's the problem. So anyway, that's my advice.
That's good advice. All right, Greg, it's probably a good place to stop. Stay tuned for more Moving Iron podcast after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with FurrowVision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a Deere.
Hello and welcome to Moving Iron Podcast. I have Sean Hackett with Hackett Financial out of Boca Raton, Florida, on here to talk about what's going on in the world of commodities. Sean, how you doing this morning?
I had a great Father's Day, and hope all the fathers listening had the same. So,
yep. How you doing myself? Just hung out, and which is the easiest, the funnest ones to do. Where I only had to fix one thing, so it was a pretty good Father's Day. Not too bad. Well, Sean, we're watching. The price of corn here took a run yesterday down, and we saw some things happen there, down below the 440 mark. And I guess, Sean, as you're looking at the marketplace, you saw a couple things happen. Friday, we had new mandates for renewable diesel. What that looks like, we also have the Iran-Israel situation. It's not necessarily escalating, but it's still there, and you see some draw in the market there. So I guess, Sean, as you're looking at the market right now, I guess talk to me a little bit about what you see happening.
Well, always with a geopolitical situation, is it an event and it just fades away, which is what normally happens, or is it something that's more sustainable, escalating, and becomes more of a global protracted issue? And of course, we've seen crude oil go from $54 a barrel, and we're trading, we've been trading on north of 70, so that's quite a move in a very short period of time. And so if higher energy prices were to persist, that would reverberate into inflation, into hard assets, into cost production. And that's always been a bullish underpinning for agricultural commodities. Fertilizer prices took off on this escalation of war as well because of the nature of proximity to Russia and that sort of thing. Word today is, Trump is still trying to work something out. I don't think that's going to be a driver unless Trump says deal's not happening and we're going to go into it. We're going to get more involved. I think if the U.S. says that the U.S. is going to get involved, that's when the markets start to react on a more longer term basis. Well, right now we're still the observer watching things happen, but we have yet to say that we're going to actually get involved and take a leading role. The renewable mandate was very significant, higher than many had been expecting to see. It now means more demand for soybean oil, more demand for bean crush. It means those 280 million bushel carryouts that the USDA says we're going to have next summer could be considerably lower if the bean crush is underestimated. We're going to need to draw millions of acres more into soybeans versus corn and cotton and rice and such. And so the soybean market between now and next spring has to determine what's the right price to get those acres. And of course, if you deprive those acres from corn and cotton and rice and such, it tightens everything else up. So it's a longer term issue. Short term, however, we need Mother Nature to tell the market that the trend line yield that the market right now feels is in the bag may not happen. And we're not getting that signal yet. Everything still looks pretty good. Getting timely rains, not a lot of heat. And so that's where we're at. I do believe and continue to believe that we're going to be looking at a change to a warmer, drier pattern at the end of the month, past the 4th of July weekend. And I think it could persist through early August. I don't think it's going to be hot enough to create a major crop problem, but I do believe it'll be dry enough and hot enough for long enough where it counts, take a few bushels off from trend. And that's all you would need. I mean, if you get a 178 yield like we did last year, Casey, your 1.75 billion bushel carryouts to become 1.3 to 1.5 very easily. And that means that does not mean we're running out of corn, but that's not a sub $4 corn market. We already showed that last year, we were able to run the market up to north of 5 with those kind of carryouts. So my view is that we had an opportunity earlier in the year to get old crop tidied up and get most of that sold, which we recommended, as you know, on a cash basis. And we're looking for some kind of a counter-seasonal mid-late July peak or rally into that peak based upon weather to start moving and start pricing some of this new crop corn. Also remember something, however, that we are expecting a very, very cold, wet harvest with potential for a late September freeze, which would mean a lot of crops in the north may not reach full maturity. So not only is it going to be slow to get the crop out, we're going to have some quality issues, some fungus disease issues. That also take a little off the top, but that could create quite a post-harvest rally if you had something like that really take place. That could be your second opportunity to get some new crops sold. So we think between some type of a mid-late July high and some type of, let's say late October to late November post-harvest rally high, there should be some better opportunities than today to get moving on your new crop cash pricing.
Right on. Okay. Let's bounce over and talk a little bit about what you see happening in cotton. So I know that's been on the minds of a lot of folks in the South. I guess as you look at the cotton market, what do you see happen right now?
We're going to get this acres report here at the end of the month, because we have the planting intentions at the end of March that said what we think everyone's going to plant. Then we come out with June with the USDA saying pretty much what they planted or pretty close to it. And I don't think they got everything planted in cotton. It was too cold, too wet, too long in the deep south and the southeast. And I just don't think all those acres got in the ground. So I'm expecting to see that number come down. And that should be a support for the marketplace. And additionally, cotton is a hot weather crop. Like, it likes warm weather. It thrives in a drier, hotter kind of a growing climate. That's why they plant it in Texas, because it kind of doesn't need a whole lot of rain. It can withstand a lot of heat and dryness and still produce a decent amount. Cold and wet, though, is not what cotton wants to see. And we've had a lot of cold, wet weather that it's just not likely going to produce the quantity or the quality that the U.S. is typically expects and anticipates. So, and of course, supposedly we have this trade deal that we shook hands on between Trump and Xi a week ago or so, and we don't know the details, but apparently they're going to hash out those details and sign a formal agreement here in the weeks to come. My anticipation would be that we're going to see some minimum purchase levels or quantities for cotton and corn and soybeans. Nothing like what we saw in 2019. I'm not looking for a big bang kind of thing, but I do think that they're going to set some levels that are substantially above what we've been seeing in the last 18 months. And in the cotton's case, shave off a little production, increase a little demand from China on a trade deal, and all of a sudden those ending stocks that we have would very quickly move to an uncomfortably tight spot. That's what we think the likely scenario is from now heading into late July, August, is the combination of those two factors creating a much tighter market. Not expecting anything crazy, but we've been stuck, Casey, as you know, in this 65 cents to 68 cents sideways. I mean, just been doing nothing forever. And we think we can make a pop in the mid-upper 70-cent range on the December contract, based upon what I've just mentioned, that potentially could give the producers an opportunity to sell a price that, while not fantastic, that price will pencil out. They can pay their bills, and they can farm next year and grow more cotton. So that's what we're expecting to see, and that's what we're hoping we can get, and hopefully make that recommendation to those cotton producers we work with that watch your show.
Right on. Let's talk about the proteins real quick. When you're looking at cattle and hogs right now, what are you seeing happen there?
We went back 60 years and said, why do cattle prices make a high? What were the conditions that they made a major high? Majority of them all occurred the year that herd rebuilding began. And they occurred typically in the third quarter of the year that herd rebuilding began. And then we also looked at all the rallies that occurred in the past due to disease issues, whether domestically or internationally. And we've seen this in the dairy industry last year, with avian flu, and African swine fever in the hog market. There's a fuse. And what we've learned about animal disease is that the fuse is about 6 months. You just can't trade a disease fundamental longer than 6 months before the market just moves on. And if you look how long we've been trading screwworm out of Mexico already, and you look at where we are with herd rebuilding, third quarter is coming up here. We really feel that we're this final surge we've seen in the cattle price on the combination of the export ban or import ban from Mexico on screwworm and on clear signs of a tighter animal supply from herd rebuilding is setting up this final push to make the final high during this historic bull market that we've had in cattle for the last several years. And so it could happen any time, but certainly we would anticipate over the next 1 to 3 months to see, if history is any guide, a final top in this market. And we would really encourage cattle producers to take full advantage of finding as many possible ways to lock in long-term cattle equities they can in their business, because we know there's going to be times, as there always is, where the cattle industry is not very profitable, and it can be years that it's not profitable. And we just want to make sure that if and when those times come back, that there was enough profit booked during these times to weather the next trough that's inevitably part of commodities. In terms of the hog industry, what's bad for cattle is good for hogs. We've seen the consumer sentiment index just crashed over the last several months because of the tariff war and economic worries, and we're starting to see demand for beef really start to show clear signs of pulling back. Now the price is still going up because the supply is falling faster than the demand, but we're seeing for the first time this finally seeing a rotation to more pork demand, to more pork options. The consumer finally saying, we got to downgrade to a more affordable pork protein versus beef protein, at least for now. And if you looked at since early April, the hog prices outperformed the cattle price by a fair margin for the first time. It's years since we've seen hog prices gain, and that's because of the demand switch that we're starting to see. You look back at the cattle to hog ratio over 20, 30, 40, 50 years, anytime we've seen the cattle price at this overvalued relative to the hog price, within 2 years to 3 years' time, we've seen that price ratio get back into parity where the hog price and the cattle price are trading actually fairly similarly in terms of price per pound. We would expect and anticipate between cattle prices coming down and hog prices going up because of this grand switch we're seeing, that we'll see those two markets normalize again. So we think this is a pretty important switch, rotation, that finally the economics are winning out. This price distortion is winning out. High prices, the best thing for high prices and such forth. And eventually value is rewarded and expensive valuation is damaged. And we think we think we've crossed that important inflection point for both. So we're pretty optimistic hogs are going to have a good run, a good period of profitability after just a brutal period we've seen. And cattle is going to get into a more challenging period after an incredibly prosperous couple of years that they've had. And that's the ebb and flow of how agriculture and the different industries go through. There's always times that you're profitable. There's always times that you're not, and you're just trying to make sure you manage that risk to your best ability, so that the trough isn't too bad, and that you've made enough money during the good times to weather the storm.
Right on. Okay. Well, Sean, good stuff as usual. Folks want to reach out to you and get more information about what you're doing over at Hackett Financial. What's the easiest way to do that?
HackettAdvisors.com, HACKETT advisors with an S.com. Also, Twitter pages at Faradix11. From time to time, we put some stuff on there about our interviews or things that we talk about agriculture, how we make price forecasts, our weather outlooks, so that those that have an interest in how we do things this type of information might be of value to those that are listening and watching your show.
Right on. Well, Sean, I appreciate you being on the podcast. We'll catch you again next time.
Look forward to it, Casey. Thanks.
All right, stay tuned for more Moving Iron podcast after these messages.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right, welcome back to Moving Iron Podcast. Aaron Fennell here to talk about what's happening in the world of equipment. You are the CEO of High Plains. What is it? High Plains Wholesale.
High Plains Wholesale.
High Plains Wholesale, Chief Entertainment Officer.
Yeah, I was going to say, be careful. Make sure that you fully describe what those initials are.
Chief
They're
Entertainment
not
Officer.
the normal use of those letters.
Chief Entertainment Officer there. You see him on Facebook all over the place, putting out his deals of the week and whatnot, and pretty entertaining stuff there. You got a lot of stuff happening, man. There's quite a few. I watched one the other day. You had an air seeder that you had on there.
Yep. We got a little. Try to put a little of everything. This peek behind the curtain. Be a heavy focus on harvest and hay with the seasonality of it and whatnot. So
yeah. Stay
tuned for more.
Yeah, you saw a lot more balers in this time of the year than you do. I don't know.
Typically.
The dead of winter.
There's, there has yet to be that. And you got to keep in mind, our baler business, by and large, is the rancher. The guy putting up the bales, the guy who feeds the bale. We do have a little bit of commercial in rounds, but typically commercial hay in this part of the world is 3x4s and 4x4s.
Yeah.
Big squares. Put them on a truck, haul them. That's just how life is.
Yep.
So we have yet to have that. Well, it's November. We really should go to town and get that new baler ordered.
Yeah. Right. Yeah.
Not like, make sure you're here June 5th and we'll get that new planter hammered out.
Right. Yeah.
Very different world.
Yeah, totally. Yeah, it's funny, you look at balers for what they cost, I looked at a new baler the other day, it was $75,000,
Right.
Which, if it's like anything else, when you haven't looked at one for a while and you kind of start just kind of dinking around a little bit and you start seeing like, well, what's a 1-year-old with 5,000 bells? What's that look like, And you're seeing like $65,000 and I'm like, well, God bless, how much does a new one cost? You go out there and look at the new one, you're like, oh, okay, I guess I see why this was $65,000 now.
Right. Well, think about it. I realize everything's gotten so crazy.
Right.
A row crop tractor almost doubled in price in 5 years.
Mm-hmm.
Balers were like 50.
Right.
Throw a dart at a board. Doesn't matter the brand.
Yep.
The new baler's 50. And that was like for a decade.
Right.
Like they started at 49.8 and ended at 53.5.
Mm-hmm.
Like that was your decade of baler movement.
Right.
Turn the page.
Right.
Boom. Like, wow, what do they all do? Oh, it's the same.
Yeah.
Pretty much the same baler. But, that one shaft is bigger and so's that chain.
Yeah.
It's just, it costs more to build. Sorry.
It's just the world that we live in. But it's still amazing that the price of a baler, the way they are, it's still kind of the impulse item of the equipment world. Really think about it, because don't get me wrong, people are definitely planning new baler purchases and Mocos and those kind of things into their budget for the year. But you still get the guy that shows up the day before first cutting and said, "All right, what do you guys got for balers that are ready to go?"
Right.
You know what I mean? And so you're like, "Oh, well, we've got this new one we just set up, and then we've got these used ones over here that need X, Y, and Z, and it's going to be a bit. Well, I need it this week if you can get it, type of thing." And so it's not a lot of impulse buys for balers are catastrophic failures, right? That's where that they caught on fire, or there's some major issue.
It ate itself.
Yeah, it did something crazy on the inside of it, but
2 of those rollers are inside that bale. Try that. That's a cool trick.
But you see how that plays out. So it's funny to watch how the baler market is, for as much as it's evolved as it's stayed the same.
Yeah, and one thing, it's an impulse buy at all levels.
Right.
I am the bottom level of the hay man.
Yep.
And the first thing that happens when that baler breaks down and I can't walk through it on the phone how to fix it because I'm a long ways from a store, I start looking for another baler.
Yep.
Because you get to that point where you fall under like that 15,000 mark on balers.
Yeah.
Oh my God, there's just hundreds of them.
Yeah, they're everywhere. Yeah.
You get under, say under that $20,000 threshold, and whether that's too much for my caliber, But you get up to the middle of the alphabet on up level of buyer, and we got to go. Go get that baler. Let's roll.
Yeah.
You know, and maybe this one will last just long enough, and then that one's fixed, and we hook back up to that one, and they spruce this one up. Then we bring out another tractor. Then hold on to your hat, because now we're rolling with two.
That's right. Yeah.
And that is how, man, I would say 80% of places end up with more than one baler.
Yeah.
Unless they're, you know, that big that from the start, hey, here we go. You know?
Yeah. Yeah. But you start looking at like hay rakes and those kind of things. That's the most impulse buys that are out there, because typically my running joke with that kind of stuff is if someone's trading one of those in, it's used up, or they've bounced it off of the bridge for the eighth time, and now they're this telephone pole is about to fall over because it's been hit so many times by the hay rake type of thing, That kind of stuff is very impulse.
Here's a good one for you. As my father would say, an end user. I've gotten rakes that have 8 tires, a lot of rakes have eight tires plus.
Mm-hmm.
All 8 tires wear very different. It's that tweaked.
Yeah.
Yeah. But the beauty of it, what makes a rake an impulse buy, I mean, they just don't cost that much.
Right.
So it's,
in the grand scheme of things, it's pennies,
Right. If you're a hay operation of any kind of scale, they're damn near a disposable item.
Yeah.
There's just nothing to them for them to last and hold up for. Nobody's got it. Well, we've had this rake for 25 years.
Yeah.
If they do, it's not any kind of scale it's covering.
Right.
Or it's got a lot of kids that need a lot of projects in the winter.
Yeah. Yeah. And I think that's the thing about hay equipment when you start looking at it is it's the levels of stuff.
It is.
Of the equipment and how you see things. There's levels of equipment all the way through the stuff, but hay equipment is a very, very long and very broad levels that fall into that.
It is. For instance, Casey, you take, let's look at everybody's favorite piece of used machinery, the combine harvester.
Mm-hmm.
Okay. Whether that guy's got a quarter and a 6620 yellow cab or 30,000 acres and an X9, the combine itself is going to be in the same caliber of shape to get the job done.
Right. Yep.
Not so on a baler. Not so on a baler.
Yeah.
You'll have the guy that comes in. I'm the 10 to 15-year-old baler, full green light.
Mm-hmm.
I don't want to, if I have to call you in June and July, it's not going to be very fun. Okay.
Yep.
You have we brought it in so you can tell us what's wrong with it and we'll know what to look at first every day.
Right. Yeah, exactly. Yeah. Yeah, exactly.
And then you have oh God, we got to trade this. It's got 5,000 bales on it.
Yeah.
Mm-hmm. I know a guy locally that has a 568 Deere that's got he's over 70 now.
No kidding.
Wow. Deere's been out there and stuff.
That's a lot of bells.
My 568, I'm only at 23.
Yeah.
Just getting stretched out good.
That's right. Yeah.
But to that combine baler thing, that is so common. Or you just never see it till it has swallowed 3 of its own belts and,
right.
Here it is. And then, it really takes 10 to get this out the door. But what if we just really get it to the nats?
Yeah.
You can limp it along for 5. Do that.
Yep.
And I know that happens on combines and whatnot too, but it's so much more that guy's probably willing to fight that baler every 20 bales or so, some stupid little thing versus if that guy's harvesting 20 acres, it better be good.
Right.
We're not going to fight stupid shit.
Yeah.
I mean, you can have the heater don't work, the radio don't work, silly things like that. But the functionality of the machine, when you get to baler land, and God bless them, that's because usually that's the rancher baler And that is because they're still there for a reason.
Right.
You know?
Yep.
They've sold calves like last year once in their entire map of that ranch's life, you know?
Yeah.
The rest of the time it's, well, I got to take the calf check to town and see if we can stay on the place next year, you know?
Right. Yeah.
That's more the world. So that is why they operate that way.
Yeah.
But the Baylor's something you can do that with, you know? I won't even bail without a monitor.
Mm-hmm.
You know, our own techs are like, just watch your bales and make sure, or watch your belts and make sure it's kind of like, no, you know,
Look at that.
That makes me feel like, well, if auto steer ain't working, I'm not driving.
That was going to be my comment there. I mean, the guy that hates technology won't do it without a monitor. Look at you.
I need to know when it's full. I could explode that baler. Know your limitations. That's what that is. I know who's operating it. That's why I know the monitor has to work.
Yeah.
And, you know, a swather. Okay. Look at the other, where the hay equipment starts. So we have rakes are disposable. Now, to that comment, and you go from the custom hay guy with 3 choppers and 5 big squares and 8 live, like he is start to finish your hay guy.
Right.
You want dry fourth cutting, you want green chop, he's one call. That guy, his rake is disposable, even though it's, you know, a great big DARF and an HD2.
A 90-footer. Yeah.
Yeah. No, the Rouse Ultimate 75 wheel rake.
Yeah.
You know, even down to the rancher, his rake's disposable, because by the time and when I say rancher, I'm talking the bottom spectrum here. Guys, you know, the under $5,000 rake, if you will.
Right.
The guy that goes and buys that, he knows it's disposable. That's why he bought it, because it's that cheap that here we go.
Right.
Swathers is something that is a little bit different, it seems, over the last 30 years of selling machinery.
Yes, they've changed a lot.
You can have an operation that has a 5-year-old swather. Might be a ranch, might be custom, might be whatever, and it is beat to a pulp.
Yeah.
And they are the scrimper. And that ranch is still running an 8400 Heston, and we fix everything every winter. And, well, we don't know how many hours it's got. Tack don't work, but it looks like it's brand new, you know?
Yeah.
That rig. So it's just, it's so wild how all the different parts of hayland operate compared to in the crop world. You almost start with, you know, you got your new, and then you got your late model used, and those guys are big shop guys. And then you got kind of your B guy, and he's a huge shop guy because he's buying the rig that just came through the shop.
Right.
And then it's back there every winter, you know. And then crop world is just kind of bump like that. Whereas hay world is, well, this is how this works, and this is how this works, and this is how this works. And then if you flip it to the backside of that book, it's completely opposite, but it's all the same products doing the same job.
Right. Yeah. Yeah. The hay marketplace is it's got a wide variety.
It does.
Of touch points, you know, when you start looking at that, where, you know, some days we have conversations all the time. Like when you get to a certain level of a combine, age wise and hour wise, like where's that next buyer coming from?
Right. On
a baler, you know, you might be a guy out there, there's still 535s out there for sale, you know,
for sure.
People are buying them, you know what I mean? And that's how old a 535, it's 25-year-old baler, you know?
Oh, no, that's a 40-year-old baler.
I guess that's true. You're right. Because I keep forgetting what year it is. So yeah,
I know.
Yeah.
I'm pretty sure the 566 is like 95, 96 when I was in high school. We were in high school, dear sir.
Right. Yep.
So the 535 is older than that.
Yeah. It's going to have its 50th class reunion here coming up pretty soon.
Class of 85. Yeah. And I actually think you know how this brain works with farm equipment.
Oh yeah, I know.
I'm almost fairly certain 85 was still a 530. So I'm going to tell you, like 85 to 95 was the 535 era. So we're in the 30 to 40-year-old range.
Yeah, I keep forgetting we're in 2020s now.
Yep.
You start thinking about that. So, yeah, too, if you start looking at how things are playing together, too, is that even though the price of hay, it's like, to me, hay is just like any other product, right? No one out there, no hay guy's going to be like, well, price of hay sucks this year. I'm not going to go cut hay. Well, you're still cutting hay, right? You're still going to put it up for someone because they've got to feed it, right? And that's ultimately what at the end of the day it comes out to be. But it's the grass hay side of things is so much different than the irrigated, alfalfa type. Of
absolutely. For machines doing the same job, they're complete opposite ends of the spectrum.
Yeah. And demands for that is different too. I mean, you have your crop, more crop going through the machine, yada, yada, yada. All that stuff is all taking place there too.
Well, on to that point, Casey, especially in our part of the world, alfalfa is an irrigated, high value main crop.
Right.
Right. Other parts of the world, it's, we could plant, little alfalfa. And I know there's huge alfalfa operations in the central and eastern time zone, I'm aware. But by and large, it's mountain time zone, West Coast is where the bulk of your high value alfalfa is made, which is where the grass hay principle is completely different.
Right.
Because take our dealership, for instance, we hit both ends. We've got the ultimate primo. I didn't know alfalfa could be worth that much.
Right.
And then we have guys like me that is,
that cut the corners.
Yeah. Yeah. that their whole existence of life is to cut those grass corners by that circle of alfalfa.
Yeah.
But the difference when you get in grass hay, when I say hay, that's kind of what I mean more so than alfalfa, just because it's such its own animal.
Yep.
And it doesn't matter if you're in Florida to Idaho to New Mexico to New York. Granted, the Northeast is its own animal, but the mindset in the Southeast is if it's there, we better go cut it and bale it because it might not be there next year.
Right.
And it's that mindset everywhere except the Northeast. Theirs is, we got 3 years. We got 3 years of hay, and it's been kind of a rainy spell. I don't know if we'll even get that put up.
Yeah.
So that's a completely different mindset in the West, where your alfalfa is a 28 day clockwork, bang, 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 perfection all the time, and then you have this other world where if it's there, you better get it, whether you need it or not. Put it over here, save it for 2 years. It's just a whole different mindset, which creates a whole different business model, if you will. And I mean, from parts to shop to sales crew.
Yep.
It's a whole different deal.
Yep, for sure. And I think that's the beauty of the hay marketplace, is that there is a wide spectrum of buyers when you're looking at how all that plays out, because it's like we talked about here, if you're talking tractors, combines, planters, those kind of things, not that there's not a spectrum of buyers, because there obviously is a spectrum of buyers out there, but
for everything.
But a baler, that spectrum, like we just talked about, you go from a 1-year-old something all the way to 40 years old, and there's a buyer for all of that, right? How many buyers you got for a 40-year-old combine? Not many, right? You're
not many in America.
Even around the world. I mean, there's probably not that many guys that are buying, you know what I mean?
Yeah. That's an excellent point. That's a 9,600. Mm-hmm. Actually, no, a 40-year-old combine is, there you go. There's that 6620 coming out of the shed again.
Yeah.
That isn't even an export rig to speak of.
No.
I mean, it is if they got room.
Yeah, right. But even on that topic,
Fill up the back of the trailer.
I remember when I first started doing this, you had a 10-year-old combine, you know, the 9600 era combine, 1466, those kind of combines like that were all in the mix. All those combines, first thing I do when those things would come in trade, I'd call an export jockey, to take stuff to Mexico. And I remember the rude awakening I got on, just like, it went from being like, yep, to, well, our guys are really looking for it. What do you have that's 5 years old? I'm like, what?
Oh, I know.
When did that come from? When did you guys start doing that? And then you start looking at sending stuff overseas, export stuff to, when you could send stuff to Ukraine before the war happened, and Eastern Europe and into like Northern Africa and those kind of places like that. As you started working your way through that changed a lot, they went from wanting, 60 series combines to now 70 series combines and some S series stuff. But it was like a hard stop on that vintage of combine being an exportability and what that factory looked like.
That's because of the rotary.
Sure. I mean, yeah, makes a whole big difference. But that flip was quick. You know what I mean? It wasn't like,
I know. I would dare say, Casey, to your point, there was a period there, because when was the Ukraine war was basically the same time as COVID, right?
2022,
somewhere in there.
20?
It's about the same basket, if you will.
Yeah, I got to remember. I can't remember. Like 2021 or 22.
I would say you go 5 years before that.
Mm-hmm.
Mexico was buying newer stuff
than your Ukraine export package of machinery. They're looking for that 5 to 6 year old something with 1,000 hours on it.
Yeah. It's wow. It was always, man, you really got to get that about 20 to 30 years old and then down there.
Yeah.
And then pretty soon it's 10-year-old. Cool.
Yeah.
Then you get 5-year-old. What?
Right. Yeah.
Like,
yep.
Hey, we got to transfer the MTG on this.
Right. Yeah.
I don't know.
Yeah. Open op center up. You see stuff like driving in Brazil,
Oh, yeah.
Wow.
Yeah. Oh, look, they're over there cutting wheat in Saudi Arabia today.
Yeah. That makes a big difference in what your approach to that stuff looks like. So, ultimately, at the end of the day, the spectrums for which buyers are available for equipment, tractors is a whole nother thing too, right? I mean, tractor spectrum it's as big and broad and wide as the Baylor conversation, right?
Because Joe Blow, big farmer, could show up and buy a 4430 because we need an extra auto tractor.
Right, exactly. My putting a ton of hours on a 1-year-old tractor doesn't pencil out the same way putting a ton of hours on a 40 or 50-year-old something that just you're gonna mow a ditch with it, right?
Right.
You're gonna whatever, that kind of stuff. That again, tractors is another one of those things too, where that spectrum of buyers is very broad, very wide, very tall, very deep, and those kind of things. Because, and again, that goes back, I talk about the washout cycle. That's what I'm always talking about on tractors, because you never know when that ends, right? Because you could be 10 or 12 trades deep before you actually wash out a piece of equipment.
Oh yeah, I was going to say, to piggyback on that, your tractor. What'd you say? It doesn't have not a cycle, but it doesn't have its.
Oh, you don't know. You don't mean
like a set path it follows.
Sure.
To get to your washout cycle.
Mm-hmm.
It does. It does, because you still have your A's and B's.
Sure.
When you're
sure.
1 to 3 or 5 to 10, but it's so full of wild cards.
Yeah.
That everything is asterisk.
Right. Yeah.
That if you print it out on paper, the whole thing looks like Barry Bonds' career, because it's just all asterisks.
Right. Right. Yeah. Yeah, that's true. But they had, if you look at the dynamics that come into play there, that really the draw from which customers buy tractors is completely different than anything else. And,
absolutely.
And same with Baylor's, right? It's just like anything else. So
I would say, say your average farm has got 5 main tractors. Okay. 2 of those are, 1A, 1B.
Right.
Those 2 have a schedule.
Yep.
The rest, those other 3, it's really kind of up for grabs,
Yep.
It might be salesman like, oh man, you got a 8,000 hour 4960 and you would not believe what that thing's worth right now today.
Right.
Like, let's roll that into this 8320.
Right.
Yep.
Yep.
And then you're off and running.
Yep.
It's just whatever is. I've seen operations set up that way. That's why I mentioned that. Quite a few set up that way, where your main 2, say your tillage tractor and your planter tractor, they're on a schedule, and it don't matter if they're new rolls or you're the 5 to 10 guy. They're usually on a schedule. We run them from 7 to 10. We run them from 5 to 8. Whatever that is. But in that scenario, I've seen where those guys will do the whole case in point. That's an operation that right now is a dealer's best friend, because those 2 tractors are on schedule and they have these other 3.
Right.
And we have these 300 that we're doing crazy deals on. Right.
Yep.
So let's go talk to him. Instead of going to visit the same guys that we have for 3 years and just making our problem worse, let's go see that guy. And we refreshed his place, made him a smoking deal. Everybody's happy.
Yeah.
There's a lot of that going on at that level of operation right now.
Yep. For sure. For sure. A lot of moving parts out there. All right, probably a good place to stop, Aaron. Folks want to reach out to you and get more information about your High Plains wholesale deals. What's the easiest way to do that?
You can look up High Plains Wholesale Equipment on Facebook. You can email me, afintel@21equip.com. You can call me, text me, 308-760-1193. Or you can catch me on Facebook and Twitter. And my Twitter, I also share the High Plains wholesale listings. So
awesome.
There it is.
All right. Magic Man. There you go. All right.
Now you see me? Now you know.
Right on. I'm Casey Seymour. You can find me Facebook, Twitter, or X, Instagram, LinkedIn, wherever else I'm at Moving Iron Podcast or Moving Iron LLC. You can find me there. You can go to see the video version of this over at Farm Journal's YouTube channel. Check that out. And you can see the audio, or you can hear the audio version anyway, on AgWeb. You can see it there. It comes out every Thursday, so I look forward to seeing you there. If you got any comments or whatever, shoot me an email at cseymour@farmjournal.com, and I'll be happy to answer whatever questions you might have. Moving Iron Summit's coming up here in Austin, Texas, September 24th through the 26th. If you're interested in that, go to AgWeb, and up on the events page, click that. You can see all the information right there about speakers and whatnot. Not everything that's going to be there as far as registration goes. You find that there too. If you're in the Rochester, Minnesota area, August 21st, I believe, or 22nd, there is a Yield College that's coming up after the crop tour. Greg Peterson and I will be doing this podcast live from there, as well as doing a couple sessions on what we see happening in the marketplace. So if you're in that area, stop by and see us. We'd love to have you. So with that, I'm Casey Seymour with Aaron Fennell, Sean Hackett, and Greg Machinery Pete Peterson. Let's go loose some iron, folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.